Hi guys, how are we doing today? So today I want to go over risk management again and specifically risk to reward ratios. So we'll also look into some technical analysis patterns. So I posted this picture right here on a forum yesterday and I had lots of different feedback, but the comment that stuck in my mind the most was when someone said that these are all 50-50. Now, I strongly disagree about this, but I humoured him. So let's say it is 50-50. There is a famous quote I've heard, and it goes like this. So think of trading like flipping a coin. Over many tosses, the outcome is only 50-50. But what if I told you I would win £2 for every head and that I would lose £1 for every tail? What would you want to do with that coin? You'd flip it as many times as possible, right? So I'll let that sink in and go over it in relation to trading in a minute. But first, I will go for a quick example of one of these patterns, the double top. So the double top is a bearish pattern that mirrors the bullish double bottom. And because of the M and the W shapes, these are quite easy to find when they are forming. Now, this is a complete double top. The way you'd want to trade it would be to open the trade just after the second double top. So imagine the completion long leg of the M wasn't there. You would open a trade hoping for a bearish movement downwards from your position. That's a very simple explanation. Now, this is where risk ratio comes in, risk and reward ratio comes in. So now we've got our trade, we can take a look back into risk ratio. Now, so like I said, people were saying this is 50-50, which is not what I think. I humoured them. This is where your risk ratio comes in, and also where the quote that I was talking about earlier in the video comes in. So say for example that you buy in at the point which I mentioned, and you place a stop loss of £5 above that point, or say 20 pips. And then you place a take profit £10 below where you've opened your trade, or say 40 pips. If it's 50-50 and you get one wrong and one right, then you've made £5. Now, people were saying, yeah, but the gap will be bigger to get to £10 than it will to get to £5. But those people were trying to think too much like mathematicians and not like traders. Because most traders know that when there's a solid breakout, not a fake out, a solid breakout, there's a high probability that the breakout will continue a solid trend for a while before thinking about another reversal. So now you're thinking, right, okay, that makes a little bit of sense. You know, all the numbers might not add up like 100%. Nothing's 100% in trading, but it's the foundations are there. So now think about it like this. Say it's not 50-50. So you've already got that strong structure on the leg, the build up, the bullish power, bullish momentum coming up to that top. So you've got a lot of structure there. So there might be some room for retracement. So there's that. That might take it to 55%, 45%. So it's a bit of a better ratio. Then think about high RSI. RSI is really, really high. The currency or the stock's overbought. That could take it to 60-40. There's all these different things. Think about your double top. There's a doji candle that couldn't close above there. That's a bit extra. Now you're thinking about your retracement, your Fibonacci tool. You use that. Find a nice position to get to where you can open and then close your closing profit. And then maybe look at your moving averages. Have lines crossed over. That can take your percentage up. So now you're looking at 70-30. So now you're right two out of 3 times. It's just a rough guide. So always remember that it's never going to be 100%. But so always remember that it's never going to be 100% accurate. You'd be silly to think it was. But as long as you are setting out your stop losses and your take profits correctly, even if your trades are wrong the same amount that you're right, you can still be profitable, which is crazy, but it's true, and a lot of people don't think about it that way. Just make sure you stick to your plan. I mean, emotions can get the best of you so easily, but if you can overcome them, and you won't be too far away from growing and becoming a successful trader once you've learnt the ropes. So that's it, guys. Just a quick one today, no charts or graphs, just basic principles of trading. Please like and subscribe if you found the video helpful. I really appreciate it. Take a look on Reddit at a group called Howtotrade. There's some great content and everyone's really helpful on there. I've left my brokers in the description below as usual. Thanks again. I'll see you again next time. Bye bye.